Hi traders, Elite Currency here. My name is Chris, and today focus again on the Forex market analysis and potential trade setups on the 18th of August. Alright, lots of things happening, but first of all be aware that it is Friday. Friday is always a bit tricky because of course it's the last day of the week, so be aware of that. Regarding the dollar yen, I was talking about the potential for an ABC yesterday. That did pan out, but we have to see if price will make the second bounce. It did bounce yesterday. I was talking about the hook back here to these fibs for move down to the target, minus 272 target, perhaps the minus 61. I think I was talking specifically about this one. At this moment, price is breaking through that. So I didn't see any reaction here so far that merits a bounce. Looking at the hourly chart, you can see price is just keeping its push down. Yesterday, there was a good bounce here with this candle, or the wick, of course, as well. Those could have been entries. Those could have been a good potential bounce for this ABC I talked about yesterday. Today, I would be looking for a potential bounce at the minus 61.8 target. We can put a fib from this bottom to this top and see if price will respect this 88.6 fib at around 109. You can see price is reacting already, but it's just an initial reaction. So what I'm waiting for is this. A 4-hour engulfing twin, 4-hour strong engulfing twin, some kind of 4-hour candlestick pattern. That could be interesting. Or if on our hourly chart, for instance, price makes some weakness here, 5 to 6 candles not breaking this low, that could be a reversal trade too. Or if price breaks then above this trend line and fractal, there could be a counter trend breakout considering the larger potential wave C that could unfold on the dollar yen. So those are ways to potentially trade this bounce. An entry at the 88.6 fib is also possible, but riskier. I'm not a big fan of that myself. Is an option, but I wouldn't consider that. Stop loss, well, I'm going with the stop loss below this bottom because that is the invalidation level. If it breaks below this bottom, the bullish analysis that says ABC is invalidated. All right. So let's see if the next setup this setup worked out fine, but let's see if this setup appears first of all, gets confirmed, and then works out well for wave C or not. Your dollar actually got invalidated, so I lost a bit on that. I took the entry at the 88.6 fib. Small risk, so not a big deal. There was 5 waves up, I thought, but actually what happened was it's not a 5 wave of a new uptrend. It was a 5 wave of a wave 4, a C of 4. So those things can happen. They expanded the correction, unfortunately for me. But I did take a new long right here, so that is up at this moment, and I can check it right now live, about 17.5 pips. So this could be a wave 1, 2, 3. Now looking at the moving averages, it's yucky and corrective, so not really a great trade at this moment. It could be wiser to look at the 4-hour chart, because if you look at the momentum, this is a trend. This looks like a correction channel, and it could be ending a 4th wave at the long-term moving average. So if we zoom out back like this, put trend lines on it like that, and you can see this channel a bit better, right? Bullish channel, bullish bull flag, in fact, probably. Looking at the angle of this channel, very weak compared to the strong uptrend. So maybe not today, but maybe next week. Sorry, there could be a good bullish trade above this channel, a break, pullback, continue next week. I don't think today, that would be too much probably price action for one day. But somewhere next week, I think could be an interesting trade for a breakout pullback continuation on this euro dollar. Pound dollar still looks like a bear flag. Nothing happened here. Price is just going sideways. Bear flag chart pattern. Price respecting the 50 fib. I talked about yesterday that if it breaks pullbacks and continues, that it could be interesting. Well, it did break. It did pull back, but it only continued a bit. It didn't continue enough to break this bear flag, right? So basically, I think now it's just getting into an expanded correction. It might be better to look at the 4-hour chart, and you can see that this could be the end of the 5th wave, or still one more 5th wave left. In my opinion, the invalidation level is around 129, right here. If it breaks above the 21 EMA, if it breaks above the 50 fib, it probably is breaking then above this resistance trend line as well. Yeah, it's about to, or it's trying to. If it breaks above the 50, then and this top of the bear flag, then it doesn't look like a bearish formation anymore, and it could be a bigger ABC correction back to this resistance zone around 130, 131. All right. So that could happen next week, maybe even today as well, part of that. If it turns here, it could still be a bear flag. It could test the bottom of the bear flag, and then maybe later on break for this last push. This last push, I think, will not go too far. 128, maybe 127.75, maybe 127.50. That's about it, I think, because then the wave 5 is finished, and in my view at least. So let's take a look at the Aussie. The Aussie, we talked about it, that I'm in a trade upon the breakout here, upon this breakout of this fractal, and price made a good upside, almost hit 80, and then turned at the, or close to 80, turned for a correction. It looks like an ABC correction to me. When you look at the lower time frames, I will spare you the details, but it looks like an ABC's correction to me, at least at this moment. It is not an ideal setup, but well, it's not the bad setup. I mean, the moving averages are aligned to the upside, right? So you can see that 21 is above the 144, bullish HMA. So I think it's decent if you look at our SWOT template. You know, there was an early entry here. There could be a next entry here. And I don't think it's a great entry because of the fact that when you use our Wiz tool, it is, you know, just barely starting, right? The price reset itself at the moving average. But it doesn't mean it could not be a good continuation trade. Specifically, if you look at the 4-hour chart, you can see that this could be a break pullback continuation right here. This was the break, this is the pullback, this is the potential continuation. So I think that I will be aiming my trade. I have one trade from here. I have another trade with the early entry SWOT signal here, and I'll be aiming at 80 for today, I think, or just below it, maybe 79, 75. And I will be trail stopping these bottoms. So this will probably be a low. That means I can basically lock in profit. This is profit and a little bit of risk here. All in all, that's already profit, right? In total. So that was a scale-in, and you know, not this hour, but maybe next hour or the hour after that, I will trail stop it like this and hope it continues to my target. Let's take a look at the pound odd. The pound odd, to me, I took a small trade with small risk at this level here, anticipating basically weakness because there were 5 to 6 candles not breaking this high. You know, from this point of view, I think there could be a turn, and you can see that there is 1, 2, 3, 4th level, 3rd and 4th level broken. The 5th level is still open in my view, although price did get very close here, so we got to be careful with that. And because it missed it just by a bit, I would be cautious with the target, and what could happen is that price might bounce earlier. So from this point of view, be careful of the 61 and 78.6 fib. Those could be partial targets as well. The full target goes down here, but because this could be a bigger ABC, it is something to maybe think about it as a first target. Then moving on to, let's take a look at the dollar CAD. We talked about that too, that this could be an ABC zigzag, and that is indeed happening. Looking at this 50 fib bounce. All right, so from this perspective, there was a candlestick pattern here. There was a SWOT signal here, and trade looks to be going, you know, down. The target is around here. In my view, let me take rid of this fib here. Seems to be too many fibs at this moment, so let me redo that quickly. I think that, oh, I understand. Okay, I have to remove a template, a fib from the template. Let me just ignore this fib for the moment. All right, and there. So yeah, minus 272 target, 125, that's the main target. Let's see if it happens. So far, it does look like an ABC. Last but not least, the euro, yen, and pound yen. I was talking about basically that they're stuck in a wedge and some trend lines I wanted to keep an eye on like this. And it looks like price is trying to break below it. With this candle break, I think more bearish pressure is possible on the euro yen. But now it's at a bottom, so I don't think it's a good moment. Now, next week, I will reanalyze it and see if there are bearish setups. The pound yen, I was looking, of course, at this particular flag. And yesterday, we were looking at, let's see, at this flag. So it was a break of the break, right? you can see like this. So it broke again. It broke a smaller flag after the bigger bear flag break, and it's continuing lower. It was at a decisive decision zone 2 because of this trend line I had on the chart, and I was wondering, I had it like this, and I was saying this could be a false break or a good break if it continues. I think I was looking at this particular trend line indeed right here. So it does continue, and for the moment I think the target, if anyone is in that trade, is the minus 272 target around 140. Alright, 140 could be a bouncing spot. We'll reanalyze that next week. Gold is challenging that resistance trend line yet again. Let's see how price responds at that level, and that wraps it up for this analysis. Curious how you can take a look and analyze the charts in the same way? Check out elitecurrency.com and check out the ECS SWOT course and system. And if you like this video, of course, we would appreciate your share, like, and subscribe. More free material as well on the website. Thanks, good trading, and cheers.